So I took a short this week on USDCAD and I'm going to show you how you can spot these yourselves using these 6 confluences from my trading checklist. So my name is Oscar Maassen, I'm a funded trader as well as a personal trading coach, and with these videos I'm trying to help you guys how you can spot these trades yourself. So let's start off with structure over here and we can go over to the weekly time frame and spot the structure. So as you can see, structure wise we are structure bullish, so in the long run on the weekly time frame I'm expecting to trade up higher. Now of course this is the weekly time frame, and as you can see the swing is really big. So if my lower time frame shows me that I can still take a short setup, then that's still valid. But for now I know that I'm bullish, so I might be looking for longs. Going over to the daily over here, what do I see? Well, on the daily time frame I am also bullish, so I'm also looking for longs. Looking at the 4-hour time frame, what is my structure? My structure is going to be bearish. So on the 4-hour I could take short setups. Now I'm going to take a look at the other confluences to see if I'm going to look for longs or shorts based on the higher time frame structure or the lower time frame structure. So let's first look at supply and demand on the weekly time frame. So on the weekly time frame, what can I see? First of all, that we have a supply zone open over here where we could possibly trade towards and then react from, and we have an open demand zone over here where we could trade towards before, for example, moving up higher. So that's something to keep in mind. At the moment we're also inside this supply already, which could push price down lower in towards that demand which I was talking about. So we were inside this supply, and from this supply we could react down lower into this demand and then push up higher in towards that supply, for example. So at the moment, purely looking at supply and demand, I could look for shorts over here from this supply zone to trade down lower in towards the refined demand. Going over to the daily, what can I see? I have a higher time frame or a higher supply zone all the way at this high, but at the moment we're also still inside this supply zone. So we could still already trade down lower, and this is going to be the exact same supply zone as the weekly time frame. So from this supply we could then start to look for shorts in towards this demand zone which we have over here. So I'm also looking at shorts at the moment, purely looking at supply and demand to trade down lower to this lower demand zone from this supply. Yes, this is counter trend, but as we know, we could still see something like this before moving up higher. So if the 4-hour is bearish, which I'm going to show you in a second and you already know, we could still take short setups. And from this point, I'm not thinking of shorts anymore, but then I'm looking at longs in line with the higher time frame. But for now, the 4-hour is bearish and we could take shorts from the higher time frame supply in towards the higher time frame refined demand zones. So going over to the 4-hour, what do I see? Well, on the 4-hour time frame we are bearish like we said, but we had this supply which we tapped into. So we have supply on the weekly, the daily and the 4-hour time frame to push price down lower in towards the lows. So then I will go over to liquidity and let's see on the weekly if we have liquidity to push down lower. First of all, let's talk about this bigger liquidity. We took a lot of liquidity above the highs, which could push price down lower to take some liquidity at the lows as well. So we gotta keep that in mind, that even though we are structure bullish, we took liquidity so we could see a reaction down lower before moving up higher. What do I mean by a reaction down lower? That we take some liquidity at the lows, which could fuel the next move up higher. So at the moment, yes, we did take some liquidity at these lows over here, so we could see some possible upside on the weekly time frame based on liquidity. But is this a lot of liquidity? Yes, because it's a weekly time frame, but as you can see, this is just internal liquidity. If we took out, for example, this low, this is major liquidity, as well as this and this low. Why? Because it's really a pullback that has happened from that point. This is just internally inside this move up. So this is also a little bit of weaker liquidity. So even though that we grabbed liquidity at these lows, we could still trade down lower from the supply, but we still got to keep in mind that we did take some liquidity which could push price back up higher. Now if you can also take a look, after grabbing liquidity at the lows, we took some internal liquidity over here at the highs as well. So from this internal liquidity, we could see a move down lower in towards this demand, for example, and then move up higher again. And that's also what we saw. So we took this liquidity, we moved up higher, we took liquidity at the highs, we then moved down lower, and then we created this supply. So at the moment we could still trade down lower to take some more liquidity at the lows, for example. So in my opinion, it's still okay to trade down lower because we reacted from the internal liquidity and we kept on pushing down lower in line with our higher time frame liquidity play to take some liquidity at the lows possibly. Looking at the daily time frame, again, the same liquidity point over here, which we just took out, and this caused a reaction in towards the upside. So then what do you also see? Well, that we took liquidity at the highs over here, which is going to be exactly the same liquidity as on the weekly time frame. This pushed price down lower to take liquidity at the lows, and from here you got a reaction. So on the daily time frame, we did not have any liquidity, so this is not the best thing. What the best thing you would want to wait on purely on technicals is to wait for this liquidity to get taken out before taking a short setup. I'm also going to explain why I did not wait for this, and I already took the short setup without taking daily liquidity to fuel the next move down lower. And I'm going to explain it in a second, but now let's talk about the liquidity on the 4 hour. So on the 4 hour time frame, we broke structure, we moved up higher, and we took some liquidity at this high, which could fuel the next move down lower again in towards the new swing low. So for now, we took liquidity on the 4 hour, so this is possibly going to push price down lower already. We know that we have daily liquidity above this high, so we need to be careful before taking the actual trade. So what did I do? From the supply zone, I was careful. I waited for my entry model, which I'm going to show you in a second. And then I decided to already take the short setup because we had enough confirmation from this liquidity to push price down lower instead of first taking this liquidity before actually moving down lower. Also, fundamentally, USDCAD for me was really bearish, so I took it more aggressively. If I wasn't sure, if I was neutral on USDCAD fundamentally, I would possibly wait for a double fractal break, which happened over here, and I would only got entered over here at this double break, which I'm going to show you again in a second on the entry model, but that's not what I did. I was a bit more aggressive because the fundamentals were also heavily bearish in my opinion, and that's why I didn't wait for that daily liquidity before moving down lower, because for me that 4 hour liquidity was already enough. So looking at the next thing, that's order flow. First, look at the weekly time frame. So what can we see? Actually, that the order flow is bullish on the weekly. Why? We have demand zones that are getting respected every single time, and this pushes price up higher again and again and again, right? So as you can see, this is our bullish order flow, and this is our latest demand, which we should tap before moving up higher. So at the moment, even though we have bullish order flow, we could still trade down lower in towards this demand, and then we could continue the order flow up higher. But at the moment, we could still trade down lower. Looking at the daily time frame, what is the order flow? Well, for me, the order flow is bearish. Why? Because you can see we are just respecting the highs and we are breaking the lows at all time, right? So that's why, in my opinion, we are order flow bearish, and that's also great because we want to take the short setup in towards this demand zone. So going over to the 4 hour, we were 4 hour bearish. We returned up in towards this liquidity and this supply, but was the order flow already bearish? Not yet. Why not? Well, because we just had a supply zone. And what is order flow? A chain of supply or demand zones. So we needed another supply to be created, which happened after this fractal break over here. So we broke this high, we broke this low then again, and then we created a new supply zone. So what is this? One supply and a second supply. So this is order flow because it's a chain of multiple supply zones. So once we broke this low, we had another supply zone, and we also could check off order flow of our checklist. Then we have the last one, premium versus discount. So how do we use this? To see if price is ready to move down lower, right? So for example, we have the structure over here. You get the pullback, and then it's used to see if the pullback has been made in order to then start to short again in towards the swing low. But let's start off with the weekly time frame to see if we can already use this. So from the swing low in towards this swing high. So what is a swing high? This is a swing high. Why is that the swing high? Because we traded down lower, we traded up higher, we got a pullback, and then we traded up higher, right? But over here, we do not have a break of structure. This is just a wick. So this doesn't do anything, and this still is the swing high that we need to break with a candle close in order to be swing bullish again. But this remains the swing high. So what do we see? Discount prices over here, right? So we know that after the move up, we get a pullback in towards the 50% level normally, and as you can see, a perfect tap, and then we moved up higher. But as we have seen with liquidity, order flow, and supply, we could still get a little move down lower on the weekly and then trade up higher, for example. Going over to the daily time frame, this is also not going to be in our favor, because if we take the PVD from the swing low in towards the swing high over here, now you will see that we already tapped discount prices. And what does this mean? That we could start to look for longs. But as we've said, we are in supply, we took some 4-hour liquidity, so we could see a possible move down lower, and from this demand I'm then looking to take long setups. So this trade is not going to be AAA plus, but in line with the fundamentals, this is still going to be nice. So the fundamentals were bearish, which could mean that we could take that short setup before taking long setups technically in towards those highs. Okay, so going over to the 4-hour over here, what is a PVD? Like I said, from the swing high in towards the swing low, because we are bearish, you can see we have premium prices, and this is going to push price down lower, and that's what we want to see. So we tapped premium prices, and this is where my alert was. So I put my alert on that PVD, right, those premium prices. Then I waited for the order flow switch, which we have seen, to create this supply, and then I knew, okay, after the break of structure, you get a pullback. We get the pullback in towards premium prices, and from that point, you could start to take shorts in towards the swing low, because then your pullback has been made. So that's also checked off as well. So then we need to go over to the entry model, which is going to be on the 4-hour. So what is going to be the entry model? This is actually going to be the same as the order flow in this case. So we had a fractal break to the upside and then a fractal break to the downside. This was your entry model. So you want to validate if this supply and liquidity is going to push price down lower, or if we're just going to continue up. Take this liquidity, for example, before moving down lower. So how do we validate this? Looking at fractal structure, and this is going to be the entry model. So the fractal structure was bullish over here, and then we broke the fractal low at this low. So at that moment that we broke the fractal low, we then created the supply, and then you place your entry on top of that supply zone, your stop loss above that supply zone, which is going to be a safe high, and we do not expect to break that supply in order to move down lower. And then you target the lows for a 1 to 3 risk to reward. So this was a trade. I hope you guys learned a lot. If you guys have any questions about this trade at all, make sure to comment it down below, and I will make sure that I will answer your questions. And I will see you guys tomorrow in the weekly outlook. Ciao.